tarde to all of you in the United States and here in Portugal. Boa tarde, welcome. I am John McNertney and I am loving life today. It is a 25-degree Celsius day here in lovely Lisboa, Portugal. And I'm feeling a little bit tired, honestly. I came off of a long Camino last weekend, which means I walked 50 kilometers with children ranging from ages 9 to 15. So I'm the one that should observe caution because life can get a hold of you sometimes. So let's get this show on the road. So I'm going to read through some disclosures here. Then I'm going to go through our list of topics, and then we are going to talk through all of our topics. So disclosures, as always, it is a fact that as a financial advisor, I can give financial advice, of course, and be compensated for it. I cannot, however, be held accountable for this information that we are about to share with you. It's strange, I know, but unless there is a contract between you and I can't give you direct and specific advice to your situation. So please either reach out to me after we talk here or make use of the information as a springboard for your own research. And as I've pointed out on this slide, I wanted to point out this is not intended to be an all-inclusive guide to your DIY activities. You DIYers, do your thing. But please manage your own personal tax circumstances at your own risk. We do believe that education in just about every subject on the planet is valuable and can help you to avoid catastrophic mistakes. That's the aim of what we're going to do today. But for more information, again, I won't shamelessly plug myself again, but please do reach out to me if you want to, or talk with your current professional as well. In case you don't know me, here is a picture of me on said Camino with my buddies last week. Fun fact, none of these people pictured here speak English as their primary language. Yeah, I'm doing it, guys. But yeah, the Camino de Santiago. But this all started over 16 years ago. Actually, I think 20 years ago with a BS in psychology at the University of Iowa. Go Hawkeyes. And very quickly thereafter, I realized I did not want to be a shrink. I am actually better at my current job. And I now hold a certified financial planning designation as well as a fellowship from the Global Financial Planning College. I'm currently co-located in Lisbon, Portugal, and in San Francisco, California. In the business, we call that a strategic barbell approach, which means that I pay a lot and a lot less in both of the places that I call home. At the end here, I've added one of my primary virtues as a financial planner is my natural curiosity and resourcefulness. So please write down your questions as we go through these highly stimulating slides that I'm about to take us through here today. So, as promised, our outline. Number one, we're going to talk about the U.S. We're going to briefly take you through what are the tax obligations that you, as a U.S. tax filer, have got to go through every year so that we can compare them with part two, with your Portuguese tax obligations. We're going to talk about the Portuguese tax system in general, how it is, how it's structured, and how comparatively it is similar and different to the U.S. tax system. And then we're going to talk about special regimes which exist for expats. And then we're going to talk about strategies, different kinds of considerations that may come to you as you make your way through this journey in Portugal. And then we're going to, of course, recap. We're going to give you an opportunity to ask lots of questions and hopefully receive some good answers. And so that is it. Before we started into the information, I oftentimes at the first call I ever do with anybody, they ask me, so remind me again, what do you do and why are you important in the picture here? And so a couple of slides to address that question. I am a certified financial planner. And what's interesting in the United States, especially compared to Europe, is we have a very advanced system, a system inside of which we have fiduciary practitioners like yours truly that keep themselves up on a broad range of financial topics instead of just specializing in that one and only tax return or in that one and only tax question that you must pay oodles of money to me and to my associates to help you solve for. I'm there all the time when I'm working with a client. And so if you think about people you have a long-term relationship with, they need to answer to more than just the problems of today. And that's why financial planners are helpful, I think. They create a plan, they stick with you, they become your accountability buddy, your account buddy. There was a South Park joke in there somewhere. That's financial planners. Of course, CPAs, certified public accountants, are extremely valuable to us as well. I can't do your tax returns. Only a CPA can do the tax return and can put their stamp of approval on that return and be liable. Juris Doctorate, a tax advisor, tax attorney. These guys are usually, um, sorry guys, but you know they need you when all hope is lost on the rest of what it is you're trying to do. If you need to seek representation in the eyes of the IRS tax court, you need to get yourself a tax attorney. Now, the interesting thing in Portugal is advogados, os advogados para os impostos, they are different. They are actually going to be able to provide you with more generalized strategic advice than the US tax attorneys are. And I find myself oftentimes turning to tax attorneys that are specialized in immigration tax so that they can sort of help us work out cross-border issues as well. And then you have the contabilista. Contabilista é uma coisa diferente. This is an accountant that has nuance differences from the US accountant. Primarily, the contabilista is going to be attached to you if you have your own company, so that they can basically do your bookkeeping for you. I just sent all of my contabilista. I sent all of my last month's bank statements to the contabilista so that they can organize them and they can provide timely reporting to the central authorities that need to track you on a regular basis. So anyways, love it, hate it. I just thought that you should know that there is, of course, a range of individuals that can help you with your range of issues. And, you know, my colleague Ryan and I, and sorry, there's some new colleagues out there. I need to get you some cute avatars as well. This is us. We're comprehensive financial planners, and you can look at the broad range of issues that we can assist you with later on. Okay, so I have a Q&A question here, and I feel like I'm going to address it later. Don't take it personally, guys. I see questions and answers. I'm going to address them all. If they're very long, like this lovely question here, I will address them all at once at the end. Okay? So just to let you know, load them up there. I will definitely shoot all of the bullets that are chambered at the end of this presentation. So, as promised, here is our wall of words. We have to go through this. So the general tax environment in Portugal. Portugal has a progressive income tax system. And progressive meaning that, like the United States, it progresses towards higher brackets the more income that you receive. So it starts at 14.5%, and the highest tax bracket, it's up at 48%. But not all of your income is going to be assessed at whatever bracket that you're in. Instead, if you're making 10,000 euros, you're going to be in the lowest bracket. If you're making 20,000 and you've climbed up into the third bracket, you're going to be making, you know, your math is going to be 14.5% on the first 10,000, and then it's going to be something like 22%, I think, the next 10,000, and so on and so on. All the time, I have to just sort of dip my beak into these Facebook forums and say, just remember, guys, 48% sucks, but it's not the level of tax that you're going to be faced with on all of your income. So let's not get too crazy. Portugal is progressive. Okay. Social Security contributions are mandatory for both employees and self-employed individuals. So I think that's about 15%. I did put that in the presentation. It's not memorized for the top of my head, but frankly, I have to pay this as well. It's quite expensive. And then there is, of course, the dreaded value-added tax. That's the VAT. You're going to be paying that on the broad range of services, products, goods that you consume when you are a Portuguese resident in Portugal, which is very important. If you haven't noticed this, when you visit Portugal, if you've just been visiting, you are able to reimbursed for VAT when you leave the country, and that is because you are not due uh, VAT payments if you are paying in the status of a non-resident. So you'll only be paying the value-added tax once you're a Portuguese tax resident. There's also property taxes which apply. It's IMI. And those property taxes do vary depending upon your municipality. Lisbon is a bit on the high side. I think it's about 1.2%. Understanding the fiscal responsibilities is, of course, crucial because it directly impacts your financial planning, your retirement strategies, your daily expenses. I do cash flow analysis for my clients every week. I was going to say every day, but it's not the truth anymore. I don't do as much planning. But when I do those plans, I have to take your tax expenses and then I have to load up the Portuguese tax expenses as well, because that affects, of course, your entire cash flow. So you really have to take advantage of information so that you can avoid double taxation and so that you can take advantage of the tax credits that are available to you. It's kind of the same thing. You will be double taxed if you aren't proactive with your tax filing. So you need to make sure that you're taking advantage of the foreign tax credit and the foreign earned income exclusion. Actually, it's or. You can't do them both at the same time, which I'll get into a little bit further along. Tax treaties, huge deal for two reasons. Number one, if you're making income, and I hope you are, both countries are going to want to know about it. You're going to have to report to both countries. You're reporting in Portugal and you're reporting to the United States of America once you're here in Portugal. Now, because you're reporting in both countries, both of those countries is going to look at the money that you've made. They're going to want to apply taxes. That's how income taxes work, right? But with the tax treaty, you can kind of smash those two countries together, right? Does this Venn diagram look right to you? Because it could be the right answer to my first multiple choice question that I don't actually know how to collect responses for. So just with your own monitor here, when you look at the double taxation issue, and you know that we can take umbrage in the tax treaty that exists, will your final tax calculus will it look like the Venn diagram on the left, or will it look like the you make diagram on the right? You paying A, or are you going to pay B? You're going to pay B, okay, which is great. Because if we were paying A, there would actually be a lot of overhang in both of the countries. But what's really true is that generally speaking, you'll be taxed more in one country than in the other country. And in that country, there will be some overhang, right? And we're going to get into why that's the case soon. So the U.S. Portuguese tax treaty. Savings clause. Are you familiar with the saving clause? You should be. If only for the reason that you should be aware that you can sue the Portuguese tax authorities if you're unhappy with the tax assessments that have been done. And what is the number one reason that people are unhappy these days? It's because they have NHR. And under NHR, you actually can't avoid paying taxes on capital gains. And so people have been using the savings clause, should be singular actually, saving clause. They're using the saving clause because it exists at the end of the tax treaty that exists between the United States and Portugal. And what it says is this: it says, if we don't like the outcome of this tax treaty, any U.S. person may behave as if this tax treaty didn't come into effect. We can actually behave as if the U.S. is preempting the Portuguese right to tax, and there have been a number of court cases that have been successfully filed and won. by Americans. And so that I find fascinating for a whole host of reasons. We won't get into it, but historically, it's kind of interesting that the U.S. sort of went around the world at their maximum time of strategic negotiating advantage and said, "You guys, let's sign all of these documents." And remember, we just saved you during World War II from a lot of nasty things. So that's there in the tax treaty. We have to also contend with and discuss the discontinuation of Portugal's non-habitual residency tax regime. It was designed in 2009. It was great. It is great because those of us that have NHR are going to continue to receive the benefits of NHR for whatever time remains to you. And there is a potential that you can continue to get the NHR designation at this point in time as well. So, as promised, I'm going to just address a few things here. Now, I know that like all of us, many of you go into Facebook groups. I absolutely do them myself, although I have taken an oath not to respond to issues that I might become embroiled in Facebook groups. But there are some myths and misconceptions running around out there, so I thought I would myth bust 3 of them. Myth number 1, the NHR scheme still available to new applicants. Fact, the NHR scheme has been phased out as of January 1st of this year. Antonio Costa came on the news last October, was it, or November, and he stunned the world when he said, we don't need this NHR thing, so we're going to do away with it. It was kind of funny when a month or 2 later, the guy was unceremoniously shown the door. But it is what it is, and so the NHR regime has been sunsetted. A new scheme that focuses on specific professional sectors has been introduced, and it does offer a 20% flat rate on foreign sourced income for eligible individuals and an exemption from capital gains on foreign assets. So the new NHR is kind of interesting, although I have yet to meet anybody that has been validated for it. This is sort of typical in Portugal. There's people that I know that have applied for their golden visa and successfully made their investment 2 years ago, and they're still waiting on the immigration process. Myth 2, digital nomads or name your category are completely exempt from Portuguese taxes. Wrong. Of course it's wrong. Digital nomads must pay their taxes in Portugal if they reside here. By the way, the digital nomad immigration route is the D8. Yeah, it's the D8. The new tax incentive for digital nomads that qualify for NHR 2.0 is a flat 20% rate on eligible professions in Portugal, but it doesn't offer a complete tax exemption. Myth number 3, VAT rates in Portugal are uniform across all regions. Fact, VAT rates in Portugal vary dramatically by region and by product. In mainland Portugal, the rate's 23%, with reduced rates of 6 and 13 for various categories of goods and services. So I think I've listed this somewhere else in the slides here, but things like medicine, food, there's a variety of products and services that are not charged at that top rate, and for which you also receive deductions during your tax filing time. But that will appear, I think, in a few pages here. In the Azores, the rates are 5%, 10%, and 18%, and in Madeira, they're much lower. And the Azores and Madeira are kind of interesting in that you can also qualify for the NHR in those regions. I don't think that it's been properly snuffed out in those regions either. So far so good. We've got another question from an anonymous attendee. Does it make sense to get NHR if someone might not be moving to Portugal and spend over 82 days for 4 to 5 years? What are the chances of another NHR variation that will come into effect? That's an interesting one, so I'll answer that one right now. There is a high probability that there will be another NHR, but not this year, because the PSD, the the Partido de Socialistas and Democrats, they don't have a majority, and so like most do-nothing sessions in Congress, the Parliament is unlikely to get anything passed through right now. And they won't form a coalition government with Chega, which isn't, obviously a topic we can jump into during this webinar, but not likely we're going to get another NHR. But it does make sense to get into the grandfathered mechanism if you can, and you can actually apply for the transitional regime if you can substantiate that you were in the process of immigrating during 2023. So it absolutely makes sense to get the designation if you can, regardless of anything else, because it's just a nice to have if in fact you can get it. So U.S. issues and considerations. Well, there's taxation on worldwide income. I think Singapore, and somebody told me the other day it was Tanzania. That sounds wrong. Eritrea. Yeah, Singapore and Eritrea are the only other two countries for which you are going to have to report back in to your home nationality forever. So Americans are required to report and pay taxes on all of their worldwide income, regardless of where they live. This includes everything that you want to think of here. Investments, rental properties, anything that you can think of, you're going to have to report in your tax filings. You're going to use the same 1040 as everybody else, but the standard filing deadline is April 15th. Expats receive an automatic extension to June 15th. So if you haven't done your taxes, you still got about a week and a half to get that in. Foreign financial reporting obligations, these are really, you have to religiously follow these. The FBAR, Form 114. If you have amounts in Portugal or any other European nation that exceed $10,000 at any time during the calendar year, then you have got to fill out an FBAR each and every year. And then the FATCA is 50,000. Not sure why I didn't put the number in here, but if you have over $50,000 in assets, there is an additional form that's required on an annual basis that reports in, your assets. They're very short, by the way. I have myself filed these every single year. It doesn't take more than probably 20 minutes to file both of these forms. Of course, in the US, we're going to be filing the Form 1040, as well as all of the many schedules if we are taking various forms of deductions and credits and so forth. And as we've said, that's got to be done by June 15th for expats. And in case you haven't seen it recently, here's your 1040 form. And then your FBAR and your FATCA. Foreign tax credits. You've got to take these once again, if indeed you would like to not be double taxed. We've got some great questions coming in. I'm going to make my way through this segment, and then I'll take some of these questions. The foreign tax credit and the foreign earned income exclusion, you have to take one or the other. The foreign tax credit is just a flat credit that you receive that's based on the taxes that you've paid in Portugal. So just imagine, you're making $100,000. Maybe you're going to be taxed $40,000 in Portugal. Boom, that's your $40,000 tax credit. File your taxes in the United States at the same time. You have a $40,000 credit that you can enter. Foreign earned income exclusion. You hear what that sounded like? Earned income. If you have earned income that is being taxed by another country, you can exclude that income from U.S. taxation. So you can imagine situations where you're making a lot of money abroad, and you just want to exempt that from taxation altogether in the United States. It might work better than a credit, and I believe, fact check me on this one, guys, because I believe this one's better if you also have a number of deductions that you'd like to take in the United States. And that's done via Form 2555. There's also the foreign housing exclusion and deduction. This is a deduction that allows you to deduct all of your housing costs that are associated with your life abroad. Now, this does not include your mortgage interest expenses. but you can take your mortgage interest expenses in the usual way. It's kind of interesting. Is just you can actually obtain a mortgage in Europe, pay interest expenses, and subject to the same SALT ceilings, um, fully deduct all of the interest expenses associated with a home loan that's taken in Europe. Pretty interesting. You can't double up, though, with the foreign housing exclusion. The foreign housing exclusion is good for things like rent, utilities, and a variety of other housing expenses. So that goes on your tax returns as well. All right. Before we move into Portuguese tax obligations, I'm going to answer a few questions. This one, I am unclear what you mean you get your tax designation now. If so, would you still be required to pay taxes in both the US and Portugal? How would that work? Maybe I misspoke. You get your tax designation the minute that you move to Portugal and become a resident here. The only other reason that you would want to front load that would be if you were trying to earn your NHR designation, because to qualify for the NHR designation, you have to already be a tax resident in Portugal. But just to be ultra clear, if you're not here yet, if you're not in Portugal, do not think that you need to earn your tax designation ahead of time. Sorry if I gave that impression. I have both US and EU citizenship. When I move to Portugal, would it be better to just rescind my US citizenship and pay Portuguese taxes? Interesting. I love that question because I haven't addressed this in the slides. So there are a variety. To look at the news nowadays, you might not think so, but there are benefits to being an American, and there's many benefits. And so by giving up your U.S. citizenship, there are a number of consequences that you will trigger. The number one, many of us don't have to worry about, but that is that there's going to be an exit tax that triggers. So like many other countries, including Portugal, including Spain, there is a tax that is going to be assessed as you leave the country on all the assets that you have acquired while you're in the country. And so in the US, there is going to be an exit tax. And if you need that to be calculated, I can do that for people on a one-off basis. But there's that. There's also the fact that if you're no longer considered a US citizen, anytime that you do investing in the United States, there will be a 15%, for some people 30% withholding on interest, dividends, capital gains received as a consequence of making investments in the United States. And the United States is still the number one ranked country in the world to conduct investment activities. I've talked about the fact that we have fiduciary investment advisors, for example, which isn't something you actually have access to here in Europe. It's pretty interesting once you sit down with a few Portuguese stockbrokers, how quickly it begins to feel like 1985. But that's just one of a number of benefits to remaining a U.S. citizen. And so if you want to have an exit tax, also known as the Hart Act tax calculation done, you can see me. You can see me after class. I will be happy to talk through that. Question, will this be emailed to us so that we can share this with individuals that were not here today? Absolutely. I am remiss in not mentioning at the top of the show that I will be sending, well, to anyone who would like it. I don't send them automatically, but I will send the slides to you. I will automatically send an email that has a link to the recording of this as well. So you can share that and the deck if you would like with anyone that was not here. Foreign funds. Somebody just fact checked me, and I knew I was wrong the minute I said this. I have a tendency to want to just stay on a roll. I am so sorry. FATCA is $50,000 if you're a U.S. resident with foreign funds held outside of the United States. It's $200,000 for a single person if you're a resident outside of the U.S. And for a joint filer, this isn't here, but I think it's $300,000. So FATCA is actually a much higher, it's a higher bar. IRA income, is that considered earned income eligible for the FEIE, or should I use the FTC? That's what I'm going to have to check on for you. So if you're comfortable with de-anonymizing yourself afterwards, please send me an email. That should be easy enough for us to figure out. And yeah, the exit tax only applies over 2 million. That's right. All right, so we're going to go into part two. I have a few dangling questions here. I'll move into them at the end. Portuguese tax obligations. So once you're a Portuguese tax resident, you're also required to report on all of your worldwide income. Point final. Starting to revert to Portuguese. You can tell my Portuguese lessons are finally starting to pay off. This includes salaries, investments, rental properties, other sources globally, all around the world. So the Portuguese authorities, yes, they now deserve all the same courtesies that you've been paying to the U.S. government when you lived in the United States. U.S. citizens and resident aliens must file an annual income tax using the Declaração de Rendimentos, or Modelo 3. So it's not Negro Modelo, it's fine beer. Modelo 3, it is their version of the Form 1040, essentially. And the standard filing deadline is from April 1st to June 30th. So you have a couple of months here in which you could file your taxes. You can't do it on January the 1st, which often triggers the question of which of these should I file first? Should I do my U.S. returns? Should I do my Portuguese returns first? And unfortunately, like many things in life, the answer is it depends on a variety of things. But my advice to you would be, if we never talk again, would be just to request an extension in the United States and do Portugal first once you're a Portuguese tax resident. That would be my best suggestion. Once you get into filing your taxes, there are a variety of income categories that you're going to see once you step into this tax form. The document can be found online, and the link is provided here. There will be several quadros found here. Quadros, I don't know why they call them quadros. That's Portuguese for painting. Complete and submit the document by the 30th of June. And at that point, you should be prepared, just like when you file your U.S. taxes, to pay your tax bill, or to make arrangements to have your refund sent to your account electronically. Just like the United States, there's a variety of other forms that live beneath the surface of the Model 3. There's 50 of them. Actually, I don't know if there's 50 of them. They kind of range from 1 to 50, and these declarations are only relevant if they are, as we like to say in the United States, if you know, you know. And so you're a tax professional, or if you're doing your taxes by yourself, you make sure that you want to include those additional models. They're basically schedules to your tax filing as well. Other important documents, the only one that I could think of while I was preparing these materials was for recibos verdes, the green receipts. If you're a freelancer or self-employed, then when you issue your facturas, your invoices, you're basically going to be going to the Finances portal, and you can go there and you can actually have your invoices prepared there, and you can pay your income taxes and your Social Security supplements at the point of sale, basically. So there it is, residency criteria. When are you deemed a resident? It's actually a few different ways. During the last half of last year, when everybody was scrambling to get NHR, suddenly we realized that we could become a tax resident if we said that we were a tax resident and we had an effective residency in Portugal. So as soon as you have a contract, contrato de arrendatorio, once you have your rental contract, you can provide that as evidence that you live here. Or if you've spent more than 183 days, then you're essentially deemed as a Portuguese tax resident. Non-residents, the implication here is non-residents are taxed only on Portuguese sourced income. So if you have some form of income that's occurring here, that would generate some income tax, just like income taxes received on American investments. But if you're not a tax resident, then you don't have to worry about filing your taxes with your worldwide income included. Different types of taxes. There's the progressive tax rates on income. That's the 14 to 84 to 48% taxes. There's Social Security contributions, which are mandatory for employees and self-employed people. There's the VAT, as we've already covered, and the IMI, the property tax, as we've already covered as well. The tax year, there's no surprises here. It's aligned with the calendar year. It goes from January 1st to December the 31st. And we've talked about the filing deadline of phase 1 as well, April 1st to June 30th. Although if you are self-employed or you are a commercial enterprise, there are different deadlines that will occur throughout the year for you as well. The rather impressively high tax rates are shown to the right. This is as of 2024. The 48% tax rate that none of us can believe initially is assessed at values of over $80,000 in income. And yes, if you do not have NHR, that will unfortunately include your pensions and Social Security. So it can be very expensive in the sense that the U.S. tax tables are just quite a bit larger, a little bit taller than these tax tables are. And so the filing process, we've already gone through this. It's going to be concluding here on June 30th, and typically you file these on the electronic portal. You can go to Portal das Finanças, and you can have this taken care of. In case you don't know about it, I knew I had to include a slide on NHR. So I'm not going to dwell on this slide, although, as I've said, I will provide all of this to you. It was and is, if you're in the transitional mode, fantastic NHR. It is an incredible benefit. Essentially, it's this 20% flat tax on foreign income and 10% on pension income, and you must not have been a Portuguese tax resident in the 5 years prior to applying. So you could have been a Portuguese citizen that hasn't lived in the country for 5 years prior to your application. That's fine. You have to have not been somebody who was a Portuguese tax resident recently and is trying to come back with this. And normally the applications process terminates on March the 31st, but I have it on good authority that if you qualify for the transitional regime, you will be accepted until the end of 2024. So definitely, if you haven't done this yet, get the ball rolling. Okay, and yeah, there's nothing else here that we haven't covered already. The NHR update, we do now have some advanced information on NHR 2.0. This 2.0 regime will only include specific professions. This is probably was kind of a needful thing because NHR was supposed to attract money and talent. And for the most part, it attracted a great deal of money. And so the reason, or the purported reason, that the Portuguese government canceled the NHR program was that it was leading to ridiculous inflation, which those of us that live in Lisbon or in Cascais, some of the other populous regions, it was a reality, in fact. Although it remains to be seen whether the cancellation will, in fact, create the impact that they had hoped for. Applicants must meet updated criteria, exclusion of pension income. You can also, I've been told, receive the NHR 2.0 regime if you're interested in moving to the islands. So Açores and Madeira, look into it with or without my assistance. I haven't done enough research to conclusively state, but I think it's available to you if you want to move to these programs, to the islands. I kind of have a few slides that are redundant, so I apologize. This is important. I'm going to go down to tax implications of PFIX. Super important here because you may be urged to place investments in foreign investments of various kinds. I'm thinking in particular, if you're British, you're oftentimes thinking of tax wrappers, which exists. Ways that you can make investments inside of products that look like an annuity, but you're not going to really get the benefit that they had sold to you because you're going to be hit with a PFIC, which stands for Passive Foreign Investment Company. And so this was a tax that was dreamed up by the U.S. IRS to make it really punitive to take your investment dollars out of the country. And so what you're basically faced with is any foreign investments that produce income, gains, etc. They're all going to be classified as this, and they're going to basically be taxed at top rates in the US. That's it. And so if there is an investment that you're making in Europe, say you want to participate in an investment fund that qualifies for a golden visa, then you can do it, but you must ensure that you have a certificate of compliance from whatever investment company that you're placing the investment with. It's Form 8621. It's got to be filed for every PFIC that you own. So, just make sure that that's the case if you need to make foreign investments. Strategies for minimizing your tax liabilities. Number one, avoid your PFICs. Number two, know the tax treaties and file for the correct exemptions or credits. Number three, of course, and this just makes good sense during, I think, at least your first year of living abroad, seek some guidance from a tax advisor that is experienced in working with expatriates. Estate tax considerations. We're on the final stretch, guys. Don't leave yet. Estate taxes. Are you worried about your loved ones? Well, you ought to be. U.S. citizens, of course, we're subject to estate taxes on our worldwide holdings, but we have an exemption right now of approximately $13 million per person. Okay, that's set to sunset at the end of 2025, at which point the estate tax will revert back to the pre-Bush tax cuts of 1 million. That's a big difference, isn't it? So I'm not going to get political, please. Don't ask me a question about this. But if the Republicans win the office in November, they will for sure make the Bush tax cuts permanent. Otherwise, they could roll back, and we could be faced with a 40% tax on any amounts that exceed the exemption. And so here's a flow chart that I put in front of some of my clients that need it. Again, don't judge, but if you have a $200,000 inheritance, right now your taxes will be about $76 million. So your heirs are only going to receive $132 million. Okay, yeah, cue the wah-wahs. That's a sad outcome. But really, I mean, if you want to hold on to the inheritance, there are some strategies that you can engage in. I know some of those strategies, but you're also going to be seeing this chart shift dramatically if the estate taxes go back to their I forget what the date was, but they go back to the old $1 million level. Now, Portuguese inheritance and gift tax is different. They actually do not levy an inheritance tax. There's stamp duty of 10%. That 10% is only levied against non-immediate family members. Okay, so a lot of Europeans, some of these French individuals that I meet, French persons, sometimes they leave France just so that they can have this inheritance gimme. So basically, you're not going to be faced with an extra estate tax if you live in Portugal. However, you should develop a comprehensive estate plan considering both of the countries, because if your assets need to be probated in Portugal, your heirs could be justifiably a little irritated with you, that they're going to be forced to go through the probate process, which even in the United States is a little painful. Go through it here, all in Portuguese, and they may have to deal with the forced inheritance laws. So in Portugal, your assets can't be sort of absorbed by a new spouse, for example. There is a law which allows your inheritees to receive a forced inheritance. Now, if you've set things up differently in the United States, since I'm a little over time here, I'm just going to give you a simple answer. Usually you want to meet with a Portuguese estate attorney, and you have them actually have them write an initial will that refers back to your U.S. Estate plan, which is already in place. And so my final planning strategy here, just engage with a qualified professional in that area. Case study. And then we're to Q&A. So case study here is just to show you an individual who hypothetically has moved to Portugal and followed some of the rules and broken some of them pretty egregiously. So we have John Doe here, an American IT consultant, lucky John, who moved to Lisbon, Portugal in 2021. He's got multiple sources of income, including his US salary, investment income from his U.S. investment accounts, and his rental income from a property in the UK. Initially, he's not aware of the specific tax obligations and requirements in Portugal. I mean, can you blame him? It's the pandemic. So maybe I don't worry about anything. So he didn't file his Portuguese tax return on time. He is facing potential double taxation due to his lack of taking the credits or the exemptions, and he hasn't sought any professional tax advice. He's assuming that his U.S. tax filings were sufficient. Okay. So at some point, somebody must have tipped John off that he's being rather short-sighted here, to put it mildly. So now he's engaged a tax professional specializing in expat issues to understand his obligations. Get together with John, say, look, buddy, you're going to have to get right with this situation. And so he can file his overdue Portuguese tax returns, declare all his global income. Like in the US, if you find the issue before the tax authorities do, they're going to show some leniency to you. Use his foreign tax credit to offset his U.S. taxes paid on his U.S. income and reduce his overall tax burden. He's going to apply for the NHR status to benefit from tax exemptions on foreign income for the next 10 years, and he's going to implement a strategy to align his income sources with tax-efficient investments. Maybe he hires a clever financial advisor to help him optimize his financial setup, benefit from the tax treaties. So the outcomes. He's going to reduce his penalties because he voluntarily disclosed, being a good boy, and he's going to file all of his overdue returns. He has failed to secure the NHR regime. So just in case you were wondering, did he get the NHR? He did not. So his tax filing his attorney may say, I'm sorry, John, we can try to pursue this in court, and he may ultimately actually win the day. I've heard of some cases where you can go back in time. I mean, it's wild what you can get away with. The tax systems do not approach consumers equally across the board. But he's failed to secure the NHR regime clearly. He's too late. He can claim the foreign tax credits from prior years in Portugal and reduce his overall tax bill. And he can establish proactive tax strategies and avoid risks of future noncompliance. Way to go. Overall, the takeaways are just get ahead of these issues early when moving to a new country. Understand the local tax obligations and avoid penalties. Obviously, you're here with me still, inexplicably, 47 minutes in. So just getting a lead on these things can avoid a lot of pain later. Tax advantage, take advantage of the NHR if you can. Use tax treaties and credits to minimize the impact of any double taxation, and continuously review and update your tax strategy to update to changes in laws and your circumstances. And I'm done. So that is pretty much it, although I will part with the single plug for guys like me. As I said at the top of the hour, holistic financial planning is one of the biggest benefits that you can receive from working with people like us. If I messed up and there was a gap in my information here today, that's because this is a research project, which there's not any penalties for failure. With an individual, our firm right now, I think we have something like 60 clients. We're trying to keep it to a lower number because we really get close with the individuals that we work with. We have a fiduciary responsibility. And so we'll provide you with specialized financial advice. We're going to be strategic, not just with regards to your taxes, but with regards to the investments that are performed. I did not even get into it today, but there are ways that you can manage your investments that will make them inherently more tax friendly. And we provide continuous advice along the way because life changes, and so should our conversation. That's it, guys. Thank you for sticking with me. And so now I'm going to jump into Q and A. First question is the date of residency the day you arrive or the date on your residence card? It's the date on your that you arrive. So That feels like a trick question. I know it's not, but it's really the day that you apply to finances, and you're told that your new address is your primary residence. Okay, so I actually just to give you an inside scoop, I was here during the pandemic, and I actually missed that for the first year, and I showed up a year late, and the tax lawyer helping me said, "Wow, you're not a tax resident yet," because nobody knew I was here. So yeah, it can happen that way. Here was the long question. Whomever you are, you're very patient if you're still with us. Our GV investment is under my daughter's name in Portugal. In 2023, Portugal taxes will be filed for the investment under my daughter. But in the US, I am her mother as the head of household. Do we file separate taxes this year in the US, but with me still as the head of household? I would love if you would approach me one-on-one with that. That brings some complexities to the situation, and I don't want to get that wrong. My instinct is that we should file taxes will be filed our GV, so it's a family golden visa investment. Yeah, I don't want to get that one wrong. So please ask me later, and we can work that out. I got Portuguese residency and NHR late November 2023. I spent less than 6 months in Portugal last year. Do I still have to pay taxes in 2023? The answer to that is actually yes. So if you're a Portuguese tax resident, you're doing a partial return, but not to worry, you still have time, and it will probably be a very light tax bill. If we are moving to Portugal and purchasing a house in Portugal before we sell our house in the US, would we owe capital gains in Portugal from our house sale in the US? Now that's interesting because yes, if you become a tax resident here before you've sold your house there, you technically have to report on that. And if you don't have NHR, then you will technically be liable. And the formulation of that is you will be liable for half of the capital gains of the home at Portuguese tax rates. So let's say you bought the house for 500,000, it's worth 700,000. You have a $200,000 gain. You have $100,000 of Portuguese taxable income now. Might want to figure out how to sort of change the timeline there. Would be my thinking. Um, Can you move to the Madeira or Açores, get the NHR, and then move to mainland Portugal? Um, that's a sneaky question, and I don't hate sneaky questions. But you know, they will check on you. Okay, so well, they might check on you, I should say. So you're technically running afoul of the rules by doing this that way. Would be my response. But you know, anything's possible. I have heard a whole rainbow of fruit flavors of things that tax experts have advised my clients to do, and so anything's possible. But that does not explicitly follow the rules. Would be my response. When you get the chance, can you answer about the scenario? Yeah, sorry. Please call me for the golden visa and the daughter's name with the head of household. I want to help, but I don't want to answer off the cuff because that gets you into trouble. I don't know. Thank you. No, thank you. Sorry, my mother said that the most important thing to raising children is love, and that pretty much functions for everything. Thank you for giving me some love here. What are your fees? Wonderful question. And do I have to answer it live? Okay, I will. So I have actually taken the predominant U.S. Way of doing business, which is called the AUM business. Okay, I see people leaving. Just kidding. But yeah, for some people where we're a fiduciary and we're with you for as long as you need us, we will charge anywhere from zero point 0.4 to 1.2% on an annual basis to work with you always. So I'm answering your calls, your emails, working with your advisors. That's one way that we do business. Another way is that we do a one-off plan. So we actually do a one-time plan from soup to nuts. We charge $500 US, I think in 2024, that's still considerably fair. Is how we do it. John, my wife lives in Portugal full time and has an apartment she pays for in California where her daughter lives, including expenses. She filed the U.S. taxes for 23 and wasn't able to be head of household any longer, and her tax bill went way up. Wow, that's awful. Okay, I have nothing to say except that that's awful. See, this is the danger of thinking live. I just gave you my off-the-cuff response. That's all I know with that situation. But I would be happy to work through possible responses to that if I was able. Um, we have another question. Even if I still don't know when I will move, should I still get the NHR? Yeah, for sure. Okay. The clock starts running as soon as you're granted NHR. So if you don't move for 2 years, now let's say you move in 2026, but you started the NHR process in 2024, um, still great. You still get 8 full years. If you don't get it, you just don't get it. So it's sort of like the Boy Scout motto, come prepared. It's better to have it and not need it than the other way around, would be my response to that. We've got some thank you, no thank you. Do you have a minimum AUM requirement? My goodness, that's a persistent question. No, I'm told by a lot of people, including my wife, that I should because I have to have enough time to talk to everybody. That's the truth. But I don't really have an AUM minimum because I have a lot of energy and I like to try to help everybody I can. That might change though someday soon. Single and not head of household. Interesting. So my anonymous attendee came back and said, the individual in California whose tax bill has been skyrocketing was considered that because she was classified as a single person versus head of household. Yeah, it makes sense to me now. But just for those of you still in the room, I still just find it horrible. But that makes sense to me why they did that. Oh, here's a good question. Do you have any advice and recommendations for finding a good CPA with expats? Yeah, I have actually been surprised to find some CPAs in America unwilling to file the additional schedules or uncomfortable with filing the additional schedules that are associated with claiming the exemptions of the tax credit. And so just ask your current CPA if you have one, or your prospective CPA if you don't have one, if they're comfortable. And if they're not comfortable, then probably not the best person for you. There is a firm that I work with that usually I hear great things about, but recently I had a client who had a not great experience, but it's called, why am I blanking on the name right now? Bright Tax. Bright Tax is sort of like an H&R Block equivalent for expatriates. And what Bright Tax will do is they'll do your U.S. filing, but then they will also do your Portuguese filing by working with a local partner firm. So I find them to be pretty excellent. And on the NHR application and estate planning, I have some awesome lawyers here in Portugal that I would be happy to make an introduction. I can say your name, Heather. Definitely look me up afterwards. I'm happy to introduce you to some really knowledgeable and ethical folks. Um, Someone says, thank you for the financial planning session that we had. It was the best investment we've made. Yes, I can go to sleep. I can sleep tonight. I do like to do great work. Who does your firm work with for Portuguese tax advice? I actually am transitioning right now because so part of my I think my unique value is that I have worked with a number of professionals. My first Portuguese tax professional, not the best. Neither was my second. So I'm going to be working with a third that I've actually worked with a lot. And so I have a variety of tax professionals that are suitable, I think, for different folks. Good. People telling me that this was informative. Yes, that is what I seek to do. And so I've answered all 20 questions or so. And we are at an hour. Guys, If you're still with me, thank you from the bottom of my heart. I really do, like all of us, want to make a difference in the world, and it usually works. It really does. And so, if you have no further questions, I have nothing further to say, except from the bottom of my heart, once again, thank you, thank you, thank you, and hopefully we will meet each other again. Tchau, tchau. Um grande abraço e muitos beijinhos para mim, para ti, em Portugal. Have a great day, guys. Take care.